So you were able to buy your first home and your credit was not even where you thought it needed to be.
Yes, I was. I was really, not sure that my credit was where it needed to be because I was thinking, you had to have a 740 to go into purchasing a home and having all this money for deposit and earnest money. So it was a lot of things that I didn't know that I needed to have that in actuality I didn't really need because I was a first time home buyer.
Right. And those are the things we're going to talk about today. So welcome to our Dear Future Homeowner series. I am here today with a very special sister. She's going to share her real story with her experience of being a first-time buyer. So we're calling this Dear Future Homeowners, the true story behind the keys. So thank you for joining me.
Of course.
First of all, let's get into it. Hot or ice?
Ice for me.
Okay. All right. So we're going to have our coffee. Let's go. So what's one thing that surprised you about the home buying process?
What surprised me about the home buying process was the different types of loans. Like you have your FHA, then you have your conventional. Like it was mind-boggling to know that there was so many different types, and depending on your credit, depending on how much you're trying to put down, will determine which one made the best sense for, for your family.
What was your credit like when you first got started?
So when I first got started, I would say my credit score was around about 610. My husband's credit score was around about 565. So, we both wanted to go in on the home together. So we both needed to work on our credit to get it where it needed to be.
Okay. Did you hire? How did you work on what did you do to work on your credit?
So we did a lot of different things. We didn't hire anyone. We just used the resources that was online. Figure out, Credit Karma, pulling your credit reports, first knowing what is actually on your credit history. That's the biggest thing. A lot of times we try to shy away from things that we owe. But it was important to really pull it to see that we didn't really have a lot on our credit. But there was a few things that needed some tweaks to really kind of get that boost for our credit score.
Okay. Did you do it yourself?
Oh yeah, we did it ourselves.
What was that process like?
It wasn't bad. It was one of those things. Every day I started to check my credit. That's how I got into the habit, because I was happy to see those alerts that would come from Credit Karma. Your credit score increased 3 points. And then all of a sudden we're seeing your credit score increased 25 points. So it's one of those things like each week, we was noticing our credit score go up. But it wasn't a bad process at all.
It's funny to hear you talk about Credit Karma, because I've had people who use their program, their credit score said one thing on Credit Karma, but then the lenders was a little different. But what I have heard, and you can shed some light on this, is that it may not be exactly what the lenders are looking for when they're looking at that FICO score and those 3 scores, but it is close. And if you see your Credit Karma score growing, it's a good rule of thumb that your score that the lender will see is also trending in the right direction.
That's correct. There's a lot of different credit software platforms that you can use to like monitor credit. So not only did we have Credit Karma, we also purchased Equifax as well, which Equifax is very close to like the FICO score that they pull for
one of the 3 big ones.
Yeah.
Okay.
Yeah. So we had both of them as far as for a comparison, but mainly Credit Karma we utilize to kind of like dispute any collections or things that we noticed that was on our credit report, as well as just to kind of get a big picture of what we had in our credit, as well as it did a great job with letting like credit card, your credit utilization, all of those other helpful tools that Credit Karma has. That's what we kind of used it for, not necessarily to know that our credit score was like 665 or anything like that, but for the other resources that it came with it.
Well, so she used one of the big ones. So there's Equifax, Experian, and TransUnion are the 3 big credit bureaus. And when lenders pull your score, they look at those 3 and they look at that middle score. So that's good to know. And a lot of people don't realize you can do it yourself.
We did it ourselves.
No shade to credit cleanup companies, people who clean up credit professionals, because I do know some people don't have the bandwidth to do it themselves. Like you, I was there. I had my credit report spread all across the floor, took my highlighter, and I did it myself. What happens when you dispute something on your credit? Something that I learned along the way.
Yeah, so when you dispute something on your credit, one, you're first not taking ownership that is actually should be on your credit history.
Mm-hmm.
So you go in and dispute it, and it could be anything such as it's reporting inaccurately. And so it then gives the lender a certain amount of time to come back with an answer, whether or not if it's true or not. But most times what we found out was that the debt was too old anyways, and they couldn't come back with reports to back it, and it just fell off.
Because if they can't provide any report or evidence, then it has to fall
off your credit.
So what's one thing that surprised you the most about the home buying process?
So I would say what surprised us the most about the home buying process, I mean, there was a lot of different things, going into the process. One, knowing that there's many different loans. Two, depending on your builder, they offer different incentives. And then sometimes your bank might also be, in the top competitive for like interest rates. Interest rates was another one, depending on your home buying process, because you have FHA, then you have the adjustable rate. Like, it's so many different facets to the home buying process that I can't really just pick just one. It was just so many, but it's important to go in and know these things. So then that way you making, informed decisions on what's best.
Right. Because you can shop around as a buyer.
Oh yeah, we shopped around, I would say probably need at least about 6 lenders, because they give you a window.
Okay.
Like once they run your credit report, you have 30 days and it's just one hit. So we went through credit union. We went through our lender that we chose for our house. And then our realtor had also different lenders that she wanted us to kind of see what they were offering. Right. So we went through a lot of different, lenders within that 30-day period to really figure out, okay, who was offering the best interest rate, because we're able to kind of see all the figures at the end, which is the bottom line.
Right. So they did a good job giving you, it sounds like a cost estimate if you went with them and their program. Because at the end of the day, the lender works for you.
Yes.
So you can shop around for your lender just like you can shop around for your realtor. You have to find the best fit for your situation. So that's good stuff. If you could go back to your younger self, the person you were before you started buying that very first home, what would you say to that person?
I would tell my younger self that, that's a good question.
It is a good one. Yeah. It'll make you think.
That's a good question. What will I tell my younger self before going into this? I would tell my younger self, one, it starts like soon as you get out of high school, going into college, like you're starting your credit footprint soon as you graduate. So just being mindful of things that may be enticing, such as credit cards or not paying your bills on time. Those are some of the things that I had to learn, going into it.
The hard way?
The hard way, getting into, I remember one time me and some of my cousins, we went and got an apartment and it didn't work out. And then, things like that, when you leave the apartment, they still want their money. So, then you have like judgments, all those different things, are things that my younger self wasn't paying attention to because I wasn't there yet.
Right.
So I couldn't really see it.
That's good stuff. I think we're not taught this in school. I don't think we have enough conversations about our finances, our money, our credit. And so many of us learned these things along the way.
They did. I will say now, because I'm in school system, so I'm a educator. I'm school counselor, dean of students. But I will say now a part of the graduation requirement is economics and personal finance. So that is a course now that unfortunately I didn't have in high school, but now our students are graduating with economics and personal finance going into the real world. So
is that a requirement?
That's a requirement for North Carolina.
The personal finance piece in itself, I think, is so important because if something happened with technology, I don't know if my kids know how to write a check.
These kids don't.
Yeah, I don't.
It's either Apple Pay,
Or tap,
Cash App.
That's a whole nother video. One last thing. What would you say to someone right now who feels like they're not ready because of their credit?
So what I would say, I would encourage you to just get started. It's important to have a plan going into it, and it's okay to take a detour, because sometimes, it's not a happen overnight type thing. It's gonna take time. You got to have patience, tap into your resources, family members that have been through the process, lean on them. But you got to get started.
Right.
You don't want to wait until you're ready to buy a house, but then you're not sure what predicament you are in. So, jump in and get a plan, outline it, what you're going to do each month, what you're going to pay off, how you're going to start saving. I would encourage people to at least get started with a plan.
I love that. And I hope that this encourages someone else too. I've said it all the time. You don't need perfect, but you do need a plan.